Your insurance agent is not a magician. There are things inside an insurance company that no agent can override, no matter how good they are or how long they've known an underwriter. Understanding what those things are can save your relationship with your insurance agent and protect your account. I'm Brian Dale, Truck Insurance Insider, and Chip, the Carrier Health Intelligence Platform founder, 25 years in the trucking insurance business, former underwriter. I've run my own trucks, and I've helped start, grow, and scale trucking companies from the ground up. Today, we're talking about the limits of what your agent can actually do and why blaming them for things outside of their control is one of the most common and costly mistakes trucking company owners can make. First point are filed rates and regulatory constraints. So let's start with something many may not think about. But insurance rates aren't just numbers that an agent makes up or negotiates on the fly. In most cases, they're filed with state regulators. Insurance providers submit their rating plans, the formulas they use to calculate your premium, to state insurance departments for approval. Underwriters can only deviate a certain percentage. That means your agent cannot just call someone up and ask them to lower your rate because you're a good customer. The math behind your rate is the formula. Your safety scores, loss history, fleet size, commodities, they all go into a formula and an initial number comes out. Your agent can influence how your account is positioned before that formula runs. They can't change the formula. When your agent tells you the rate is what it is and they can't do any better, they're not being lazy necessarily. They're probably telling you the truth. Your agent should help you understand how you can control the things you can control to move the needle. My second point is underwriting authority. Here's another one. Your agent doesn't have the authority to approve your coverage. That decision belongs to the underwriter at the insurance provider, and ultimately to their management and reinsurance agreements and partners. I spent years as a head program underwriter with binding authority. Even with that authority, there were accounts that I had to refer up the chain, accounts that fell outside of the program guidelines, accounts where the loss history triggered a mandatory review, and accounts where certain operations required a different level of approval. Your agent can advocate for your account. They can make the case, tell your story, push for a second look, push it up the ladder, but they can't approve what the insurance provider has decided not to write. And when an underwriter says no, that decision usually isn't personal. It's a result of underwriting guidelines your agent had no part in writing. A third point I want to make is a hard market reality. There are times in the insurance cycle when the market hardens. Rates go up across the board, capacity in the insurance market shrinks. Insurance providers that were writing trucking accounts 2 years ago pull back or exit the market entirely. When that happens, your agent isn't necessarily failing you. They're navigating a market that got smaller. If your rate went up significantly at your last renewal and you're frustrated with your agent, ask them this question first. Is this a market-wide incidence, or is this specific to my account? Because those are two very different problems with two very different solutions. It could also be specific to the insurance company's book of business performance. So a good agent will tell you honestly which one it is. If it's market-wide, shopping your account won't help. You'll just burn markets and end up in the same place. If it's specific to your account, that's a conversation worth having and about what's driving it and what you can do. Another thing I hear a lot is, my agent got me this rate 3 years ago, why can't you match it? And there's a few possibilities, but the market was softer 3 years ago and rates were lower across the board. Your safety scores and loss history might have been different. The insurance provider that wrote that policy might not be writing trucking accounts anymore at all. This happens quite a bit too. The rate 3 years ago wasn't sustainable. It was kind of bought at the time. Some agents and some companies undercut the market to win business knowing the account will reprice at renewal, so they give steep increases. The trucking company switches insurance companies, gets a great rate 1 year, and then gets hit hard at renewal when the real pricing kicks in. Using a past rate as a benchmark for what your agent should be delivering to you today isn't fair to your agent, and it's not an accurate picture of what the market's doing. The cost to repair human health and the cost to repair equipment have increased. Your agent is your advocate. They're in your corner, having conversations you're not in, working relationships that take years to build. But they operate inside a system with rules they didn't write and they can't change. So the best thing you can do is understand where their authority ends and where yours begins. Your safety score, operating procedures, driver program, all of these things that are in your control. And controlling those is how you change what the formula produces. I'm Brian Dale. This is Truck Insurance Insider. Be sure to like and subscribe and share this with somebody who needs to hear it. Thanks.